Hello, everyone. Good morning, good afternoon, and good evening to you. I'm so excited to welcome you all to the final edition on the Forex Morning Mastery for this week, as we will be reviewing how well these assets have been doing since the
Hello,
beginning of the
everyone.
week, and of course, prepare to be part of the price movement as market participants round off their trading activity ahead of the weekend. So, happy Friday to everyone, and I'm very, very glad and excited to be with you here this morning. Well, since the beginning of the week, we have been monitoring three financial assets, which includes the US All Spot, the GBPUSD, and finally, my favorite amongst them all, the XAUUSD. And in fact, so far this week, we have been quite profitable across all the assets on our watch list as we indeed took advantage of um, the negative traction against the US dollar during the midweek following the FOMC announcement, and of course the three rate cuts that has been projected for this year. And we also took advantage of the rebound in the US dollar in the last 24 hours, hereby increasing our yield on all positions. And once again, congratulations to everyone who had stayed faithful to our analytical approach and, of course, being part of this profitable journey. So, today we are going to be rounding off our trading activities along with the market participant, and of course, I have interesting trading setup, simple trading setups that we will be using to navigate the current market dynamics today. And for those of you who have been with me on both my TradingView and Telegram platform, you definitely must have gotten an update as how we are going to be preparing for today. So we are going to be expatiating on that and see how we can strategically position ourselves for the next move in a very simple and concise manner. So I encourage us all to stay tuned in so you don't miss out on the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, you're highly welcome on board, and I'm very, very excited to have you around with us this morning. I know you will be wondering what is it that we do here on the Forex Morning Mastery. Well, to simply put, I usually share a couple of videos during the course of the weekend, which gives my insight into what I think about the current market dynamics as we prepare for the new week. So the Forex Morning Mastery was born out of the necessity to do live follow-ups during the morning session as we prepare for both London and New York session. So as technical traders, we usually gather here on Mondays, Wednesdays, and Fridays to monitor price action and of course prepare for the day. And besides this, we usually on my social media platforms, I usually give updates on both TradingView and Telegram platform as the day goes by. And trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually use them to enhance your own trading decisions and strategies. So, once again, I welcome you on board and encourage you to actively engage in the comment section. So, with that being said, here we will be diving right into the business as usual. And the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the market sentiments today. And you know how important this exercise is, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing, of course, to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after the economic event. Now, Based on the assets we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the United Kingdom. Well, we had some bunch of high impactful events today, of course, from both economies. We had the consumer price index from the United Kingdom on Wednesday. We had the building permit on Tuesday from the United States. And then we also had one of the most important highlights for the week, which was the Fed interest rate decision, the Fed monetary policy statement, FOMC economic projection, and of course the FOMC press conference, where we had the Fed chair speak and give us an insight into what the Fed thinks about the economic outlook and future monetary policy decisions. He went on to further attend to press, the media, and responded to some of their questions. And one of the things we could get out from what the Fed chair said on Wednesday was, most importantly, that inflation is gradually reducing in the United States, but policymakers will need to see data that will align with this decline in inflation to further before considering any interest rate cuts. And one of the surprising aspects of the speech was that interest rates, the rate cut cycle is going to be 3, so we are going to be having 75 basis points of rate cut for this year, which is very, very surprising, as majority based on the inflationary pressure in the United States. On the last month, in the month of January and in the month of February, we saw how high the inflation is following the CPI data that came in 3.1% and I think 3.3% respectively for the month of January and February. So everyone were looking out for 2 rate cuts for this year, but we were surprised that the Fed has maintained the 3 rate cuts for this year, which further incited a negative traction against the US dollar. And we saw how the gold price rose to a phenomenal high for the first time in the era of trading of gold. So we saw that happen during the course of the week following that announcement, and then we saw a rebound happen yesterday following some resilient data from the US economy. Then yesterday on Thursday, we saw the S&P publication from both the United States and the United Kingdom, where we saw the composite PMI, the manufacturing PMI, and of course the services PMI from the United Kingdom, which gave us some mixed data and of course resulted to some mixed reaction on the GBPUSD. The manufacturing sector data came in beyond expectation, but it's still below the appropriate index to show an healthy sector. The S&P Global has a range of 0 to 100, where anything below 50 is considered as a contraction, while anything above 50 is considered as an expansion in that sector. So we have the mixed data from the United Kingdom yesterday. Then we saw the interest rate decision from the Bank of England, of course, which came in just as expected. The Bank of England left the interest rate unchanged at 5.25 since they are still battling with the inflationary pressure in the United Kingdom. Well, Andrew Bailey went on to further say that things are looking very encouraging, and that policymakers are also looking forward to signs of decline in inflation before considering rate cut. But there is this general belief that before any rate cut will happen in the United Kingdom, they will want to see the United States do that first before it happens. So this is further giving some positive influence for the pound sterling, which of course we saw during the week. And though we've seen some bearish traction, which which is a reflection of the resilient US dollar. So we are going to be looking at that asset today to see if this bearish momentum is a retracement move or probably an outright sell-off today. So fast forward to today, we are looking at a couple of high impactful events from both the United States and the United Kingdom. And when I included some mid-tier features, we were able to see some couple of more mid-tier economic features to look out for today. Now, from the United Kingdom, we've already witnessed their economic event, which happened about 2 hours ago. One of them is the retail sales for the month-on-month and year-on-year, all of which came in beyond expectation, giving us some positive signal that the economy is recovering. Then later on today, we are going to be looking forward to the Fed chair's speech, that is Jeremy Powell, and of course he's going to be talking in about how many hours is that from now? Let me see. So we are looking at about 4 hours from now. Is it 4 to 5 hours from now when he is going to be speaking following the recent FOMC announcement? Everyone will definitely want to be looking forward to what he has to say, as whatever he says will give us an insight into the economic outlook, the monetary policy decisions, and the reason why interest rate was left unchanged. So these are the things that we are going to be looking at today, and I encourage us all to mark out the timing so that we can be in alignment with that speech and see how, be on standby to capitalize on whatever opportunity the market presents to us during that time. Then we also have some couple of speeches from Fed officials. We have Barr and we also have Bostic, much more later in the day. So with this event we are looking at today, so we will be sniffing through the current market dynamics on the chart, looking out for patterns and structures that we will be using to strategically position ourselves for the next move. So I encourage us all to stay tuned in so we don't miss out on the ideas we will be sharing today. And I see your comment, Adeni Babalola. Good morning to you. Glad to have you around with us. Yes, indeed, it has been a very interesting and profitable week for us, and I'm very excited about it, and I hope you had to as well. Glad to have you around with us. So with that being said, here we shall be diving right into the business, and as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And so far this week we've done pretty well on this asset. We've had opportunities where we bought at the beginning of the week. During the first 2 days of the week, we were indeed profitable, scooping over 200 pips in profit after capitalizing on that bullish traction. And not until Wednesday we finally saw price break down that ascending trend line that has been supporting that bullish traction to incite some selling opportunities for us. And since Wednesday we have been selling this asset to the downside. And for the sake of clarity and educational purposes, let's run through what really happened at the beginning of the week. So at the beginning of the week, it was more of a range-bound structure, though the week started on a strong bullish note, but we were able to capture a range-bound structure where price was confined within the $81 level and the $80.50 area to emphasize the prevailing uncertainty at that point in time. And usually whenever we have a range-bound structure like this, we exercise patience, waiting for the market to make a decision, which will come either in the form of a breakdown of the support line of the range to give us an opportunity to sell, or the breakout of the resistant line of the range to give us an opportunity to buy. And in addition to that range bound structure, remember we had an ascending trend line which was projected on this chart since last week Friday, and we were able to connect a series of higher lows, giving us this structure to guide our trading decision. And for the fact that price action was trading above our ascending trend line, it was easier for us to position ourselves for buying opportunity on this asset. So we were able to capitalize on the breakout of the $81 area, as you will see right here. And in fact, if you had missed out on that opportunity, the market was kind enough as it came back to give us a retest of structure to incite to continue the uptrend. So since that moment we were buying this asset, and of course we had multiple levels such as the $81.50 level, and the $82.25 area. And finally, we added more at the breakout. Hold on a second. At the breakout of the $82.80 level. Though the first three positions did very well for us, but the last one hit our stop losses. But at the end of the day, we were able to scoop in over 200 pips. Well done to everyone who capitalized on that. Now, during our Forex Morning Mastery on Wednesday's trading session, we confirmed this bearish momentum following price action hitting that high at the $82.80 level, and this for us on Wednesday was supposed to be a retracement move with the attempt of price action retracing back into the ascending trend line in an attempt to continue the uptrend. However, we took into consideration the fact that this trend line could also be broken to the downside, and that if we do have a breakdown retest of that trend line, we definitely want to be part of a bearish move. And this was exactly what happened on Wednesday. We saw price break down the trend line, which lines up with that $81.85 level, where a retest of structure incited that bearish opportunity for us. And during Thursday's session yesterday, I did give an update that all sell positions were closed. Of course, we saw price moved about how many pips was that? About over 100 pips on the first sell position. We had a second sell position here. It moved about 75 pips, and the third one moved about 26 pips thereabout, though that one closed had break even. Now, during yesterday's trading session, we saw price retrace back into structure, and I was of the opinion that price action may continue the downtrend. Hence, we want to be looking out for selling opportunities below the $81.50 level, and lo and behold, that was what happened. And we were looking at if price will break out the $81.85 level, that we will be buying, but that never happened, which ensured that sellers are still strong in the market, as we saw the breakdown of the $81.50 level, and we added more positions at the $81 area, and finally had the breakdown of the $80.53 level. So it has been quite a profitable week for us all on the USOILSPOT. And at this point in time, if you had moved your stop losses accordingly, you must have been taken out of your position, because I am already out of all sell position at this juncture. But if you are not, it's high time you moved your stop losses. Let's secure this position as we begin to notice the decline in the bearish momentum in the last 12-15 hours or so. So with a secured position at this juncture, what is going to be our next line of action for today? Well, we talked about on Wednesday, we talked about the various factors that is affecting this market, from the geopolitical tensions in the Middle East, the war in Ukraine, Russia, where we saw Ukraine military strike Russian refineries, and as at Wednesday, Ukrainians have attacked about 10% of the Russian refineries, and you know how this is going to be affecting the global supply. Russia being one of the major supplier of oil in the global market, being hit with 10% of their refineries knocked out. You know this is definitely going to affect the supply in the market, and if this affects supply, what happens? Demand will rise to because there's a reduce in supply, and when demand rises, the chances that price will rise becomes very imminent. So this has further bolstered the price of USOILSPOT so far. And of recent, we had of the U.S. Secretary of State Anthony Blinken, who gave remarks that there is progress in the Gaza ceasefire talks, of course potential release of hostages, which have of course reduced concerns about supply disruption in the Middle East. And this probably could have been one of the reasons why the price has dropped to the downside. And additionally, the continued strength in the US dollar has also affected the demand for oil. And considering the fact that the US oil commodity is a US dollar denominated asset, you know definitely that whatever happens to the US dollar will obviously have an impact on US oil prices. Now, when the dollar at this point is doing very well in the last 24 hours, you know the dollar becomes very expensive for other currencies to buy before buying the US oil, which could affect the demand for US oil spot. But as it is right now, and considering the geopolitical tensions, that is the Russian-Ukraine war, and then the decision by OPEC members to extend their production cut of 2.2 million barrels into the next quarter may likely affect the demand, the supply for oil. And if this is going to be the case, we might likely see renewed demand for oil, which could affect the price of oil, considering the fact that we having concerns about supply. The EIA report and the what's it called again? The EIA report and the API report from this week wasn't that impressive, as we saw a reduced stockpile, which is a sign that the demand is eating into the supply. So for me, the path of least resistance for US oil is still looking very, very bullish. Now, with this idea and perspective in mind, looking at the technical structure here, you will begin to notice something interesting going on this chart. And what is that? Now, remember, at the beginning of the week, price action started around the $8.50 level, giving us that range bound structure. And look at that range bound structure right here. Price is back into that range bound structure we identified at the beginning of the week. Now, there's another thing that is interesting here. Remember, the lowest point for this week was around the $80.50 level, and you will see that as soon as price got into the structure, though we had a breakdown of that area, but it shows that sellers are finding it difficult to settle below that area. As you will see, after about 50-cent move, we saw price climb back up again. The second time it did the same thing during the Asian session, we saw price find buy pressure again. So for me, at this point in time, based on what we've seen on this chart, that area around the $80.50 level for me will be considered to be a temporary demand zone. In fact, if you go to as far back as last week Thursday, this area has been a strong buying niche. So due to the strong buying power around this area, I want to be leaning towards an uptrend continuation at this point. Now, in addition to that, looking at the structure following that impulsive move all the way to the downside, you will begin to notice that price action is gradually evolving into what's looking like a reversal pattern in the form of a double bottom structure. And usually when we have this kind of situation evolve on our chart, the next thing we want to be doing is to mark out the neckline of this reversal pattern and wait for it to be validated with a breakout retest of that structure. And if we do this appropriately, let me bring out my line chart here. We are going to be marking out the neckline somewhere around the $80.95 level, around here, just close to the $81 area. In fact, you could have your buy stop order above the $81. It's still almost the same area at this point in time. So I will just label this $80.96 thereabout, I think. So we just give it like that, and then we want to be seeing price action breakout of that structure for us to feel comfortable joining a bullish move. So we have a zone right now between the 81 and the $80.96 level to capitalize on an uptrend move. So let's mark this out, and if price can break out of this structure, I'm of the opinion that market participants may be holding on to a cheaper US oil, considering the various factors we talked about here ahead of the weekend, and this will welcome opportunities for us to buy. Now we will be looking at adding more buy positions. Of course, we have the privilege of maximizing the potential of this bullish move. So we have the $81.50 level, an area we shall be looking out for more buying opportunities. Then we have the $81.85 area where we will be adding more, and if price continues to find new highs, all of these levels here we will be having buy stop orders above them, so that we can capitalize on this move if anything volatile happens today. So I would encourage us all to mark out these levels accordingly, as we will be using them to manage our bullish expectations today. So this is how we are going to be buying the US All Spot today. Now, in as much as we are looking out for buying opportunities, you know how we do it in this community. We also try to ensure that we be on standby to capitalize on selling opportunities if the market presents an opportunity like that. And if we look at this current structure, what are the things that we want to see here that will make us feel comfortable selling the US All Spot? Well, remember that we had our key level for this week at the $80 area, which of course has supported the bullish idea for this week, as you will see right here. Now, for me to feel confident selling the US All Spot, I would like to see price action break down our $80 level to join a decline to the downside. Now, with the situation we have here, let's see if the market can present some selling opportunities before the breakdown of that structure happens. If it does, I will be giving you updates on both my TradingView and Telegram platform. So at this point in time, I am maintaining a bullish bias due to the reversal pattern we saw here on the chart, and of course the geopolitical tensions, the Russian-Ukraine war, the fact that the API and the EIA report for this week showed a reduced stockpile for this week, which was a sign that there is disruption in oil supply, and of course the OPEC Plus member deciding to extend their production cut into the next quarter. So all of these factors for me is a very good signal that price may likely go to the upside. So I intend to position myself for an uptrend move today, and if the contrary happens, I will definitely give you updates on both my TradingView and Telegram platform. So this is my view here on the US All Spot for today. I encourage you to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever as regards to my explanation, feel free to let me know in the comment section. In fact, if you need some further clarification, please let me know. I am here and willing to be of help in that regard. So I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. You can as well use that time to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your trading decisions today. All right. So in the absence of no questions, I hope I guess we are all on the same page, and I do hope you had enough time to mark out those levels on your chart. So with that being said here, let's move on to the next asset on our watch list for today. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the GBPUSD, and what a phenomenal week we have here on this particular asset. In fact, it has been a roller coaster of buy, sell, and of course we had another sell here in the last 24 hours, giving us over 300 pips in recent time. And if we can add the profits we had so far this week, we are running into about 500 pips on the GBPUSD. So it has been quite a profitable week for us all on the GBPUSD so far this week. Now, for the sake of clarity and educational purposes, let's run through what really happened at the beginning of the week and what led to the decisions we made. Now, remember at the beginning of the week, we recorded a loss. It wasn't a very good start for us this week, as we initially had a buy position which did not do very well. So let me share with you what really happened about the buy position. So at the beginning of the week, we had this range bound structure right here, where price was confined within the 1.27390 level and the 1.27280 level. Now, with the situation here, and considering the fact that price action was trading above that ascending trend line we spotted at the beginning of the week, it was very easy for us to lean towards an uptrend situation. But I did mention on Monday that even though the technical structure is saying buy, that based on the fundamental reports, the idea is that the dollar is going to be gaining some traction this week, and due to that, we said we will be on standby to capitalize on that buy opportunity. And if it goes into a loss, it's okay, since we have a well-defined risk management strategy in place, looking out for selling opportunities when it finally comes. So at the beginning of the week, we bought at the breakout of the resistant line of that range, just exactly above the 1.27390 area, to have our first buy position for the week. And in fact, we saw price moved about 8 pips, which wasn't significant enough for us to move our stop losses to break even. So we saw price drop to the downside, and of course triggered our stop loss order, and we were stopped out in a loss on that one. Then we saw price break down the ascending trend line, and if you remember what we said on Monday, that if price breaks down the ascending trend line, we are looking at selling the breakdown of the support line of that range, which obviously happened, and we saw price moved, I think about 100 pips thereabout, or close to that. Okay, about 60 pips thereabout it moved before the bullish traction came in, and with a well secured position, we were stopped out with some reasonable amount of profit after recovering the loss we incurred at the beginning of the week. Then during our live session on Wednesday, we begin to notice the continued bearish momentum from that sell window, with the hopes that this bearish momentum will continue to the downside. And if you remember what we said here during the Forex Morning Mastery session on Wednesday, we said that we will be using this descending trend lines to guide our trading decisions for that day. And you know how we use our descending trend lines. As long as price remains below the descending trend line, we feel comfortable in our sell position. Look at how price has been respecting that descending trend line. So it was more of looking out for selling opportunities on that day. But we did emphasize here that if this trend line is breached and broken to the upside, we will be ready to buy this asset. And with that structure in mind, we had this level identified at the 1.27165, where it shares a confluence with those descending trend lines. So it was a very good opportunity for us to join an uptrend, and with buy stop orders above the 1.2739 and the 1.276, we had 3 buy stop orders triggered to maximize that bullish move. Another profitable day for us on that one. And during yesterday's trading session, prior to yesterday's trading session, if you had watched my my price action tutorial video, which I usually share about 30 minutes into the New York session. If you watch that video, you would recollect that I said that this bearish momentum we see here could either turn out to be a retracement of that impulsive move that we saw. And if that is going to be the case, we will be looking at how price will be reacting to these two zones. This one right here at the 1.27600 area, our key level for the week, which interestingly shares a confluence with that ascending trend line. And of course, we will be looking at how the market will be reacting to this 1-2 right here. Where is the second one? I think it was right here. Yes, right here. So what we said here yesterday is if we see buy pressure around that area, we will be looking out for the uptrend continuation. But if price break down both of the structures, we will be selling this asset. And look at what happened. Price broke down, triggered the a sell position right here at the 1.276. We also added another sell position at the breakdown of the 1.27250 level, and of course we added another one right here at the 1.26750. And as at this morning, if you saw my commentary, I added another level at the 1.26200 area, which has been triggered already and actively running with some profit. So at this point in time, you should be having a minimum of 4 sell positions running in profit, while the first one is running with about 160 pips. The second one is running with about 120, that's about 280 pips, and the third one right here is running with about 70 pips, and then the fourth one is running with about 25 pips. So we are roughly with over 300 pips in profit from all of this sell position. And for those of us who stayed faithful to our analytical approach and took advantage of this opportunity, well done to you. Now, the basis behind this strong bearish traction we are witnessing here in the last 24 hours is supported by the strength of the US Treasury bond yield, which is doing pretty well at this point in time, which you know how directly proportional in value the US Treasury bond yield is to the US dollar. So if the US Treasury bond yield is doing very well, we usually see the US dollar follow suit, and as a result of this, we have seen this positive traction in favor of the dollar. And as widely expected yesterday, we saw how the Bank of England kept its interest rate unchanged at 5.25%. And if we look at the differential value between the two interest rates from both economies, you will see that it pays a lot to invest in the US dollar at this point. The US dollar is currently interest rate is 5.5%, and for the pound sterling is 5.25%. So if you have a pound sterling and you buy the US dollar, you will be paid 0.25% interest on that asset. So it's more of an attractive window for market participants to buy the US dollar at this point, and this has resulted in this positive traction. Then we also had the Bank of England governor stated that though the economy is progressively moving forward, it is not yet at a stage where the Monetary Policy Committee can justify lowering interest rate. Now, the anticipation in the market that the Bank of England will require more evidence of showing wage growth before considering rate cuts, despite ongoing investor speculation about potential rate cuts this year. Meanwhile, on the other side, we saw the US dollar maintain their interest rates unchanged as expected, and around 80% odds have been priced in for a rate cut by the month of June, according to the Fed Watch tool. If you see the Fed Watch tool, you see the odds are quite in favor of a rate cut for the US for the Fed in the month of June. Now, this morning we saw the UK retail sales data, which revealed no growth at all, which may further support a further downtrend move to the downside. So given this development, I would encourage us all to secure all the current sell position at this juncture. If you would ask me, anywhere around this entry seems most appropriate to lock in all profit. And please remember that you want to be given enough breathing space for price action to move around. So with a well secured position at this juncture, and as market participants with the Fed chairman's speech coming up later today, let's see what will happen from that speech. What will the Fed be saying today? Fed chairman be saying today that will, let's see if it's going to support the ascent of the US dollar, or it will incite market participants dropping the US dollar. So this is my simple view on the GBPUSD today. And like I said earlier, the path of least resistance for the pound sterling is still to the downside. So let's see how the market will play out, and if anything new comes up, I will definitely give you updates on both my TradingView and Telegram platform. So if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds. I'm already running out of time right now, before we go into the final asset on our watch list. All right, so stay tuned in, and you can use that time to mark out these levels accordingly on your chart. I see your comment, Adeni Babalola. I say, can you include USD JPY again? Okay. I actually have a position running on the USD JPY behind the scenes, but like I used to say during the Forex Morning Mastery, due to the limited time I have during this morning session, I have not less than 30 to 40 minutes for this morning session, and due to this I cannot take more than 3 financial instruments. And so maybe what I will do this weekend is to send out a poll and ask what do you want me to look at for this week, GBP for the upcoming week, GBPUSD or the USD JPY. I will share a poll during the weekend on both my YouTube and Telegram platform, and let's see what majority are saying. All right, so let's see what happens. I think that will be the best way for us to choose to either the GBPUSD or the USD JPY. I hope I'm fair on that one. All right, so in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, let's move on to the final asset on our watch list for today. So the final asset we are going to be taking on today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a fantastic week we have here on this particular asset, as we are currently making over close to 2,000 pips in profit on this particular asset. And in fact, I want to congratulate every single one of you who are taking advantage of these trading opportunities. Though the week did not start very good for us, remember, it was more of a choppy start to the week as market participants were indecisive, and we all know why that was happening. I did emphasize during our Monday session that it is likely that we witness some extended sideways trading activity due to the anticipation of the FOMC announcement, as major key players in the market will be stepping aside, waiting for the announcement to happen before making any aggressive bets. And due to this, we had this range bound structure identified at the beginning of the week. Remember, price was oscillating right around our key level at the 2,155 level and the 2,156 area for the first day of the week, before that range bound structure was extended into the $2,162 area, as you will see here. So as at the first 2 days of the week, we were selling the XAUUSD, but did not move very well. As every sell position we had, we saw price action snapping back into our entry point, taking us at break even at every point in time. And during our Wednesday session, as we prepared for the FOMC announcement, I did emphasize that we shall be looking out for selling opportunities due to the expectations that interest rate will be left unchanged, which keeps interest rate higher for an extended period of time. And we saw what happened. Let me show you what we saw on Wednesday. So right on the 4 hours time frame, this was what we saw here. Remember, we had this uptrend continuation pattern actually. We saw following this impulsive move. Let me highlight it so we can see. So following this impulsive move, we saw this uptrend continuation pattern marked out here at the beginning of the week, actually, for those of you who saw my weekend video on the XAUUSD. And one of the things we said here is that this consolidation phase, that is this whole area, could either transition into an uptrend continuation pattern or a reversal pattern. So we were not ignoring the potential that sellers could come in. As you would know that we are at an all-time high, and usually when price action comes into this kind of area, market participant, out of fear of price crashing from this area, may want to be taking some profit off the market. So as a result of that, we decided that we will be selling if price breaks down our key level at the 2,155, which of course it did, giving us that bearish traction. But we said here that the only condition that will make us buy the XAUUSD is for the resistant line of this consolidation phase to be broken to the upside, this resistant line right here. And you know what we did on Wednesday? We identified this key level, sorry, not a key level, a level around the 2,160, which obviously had been a strong barrier for buyers since the beginning of this week. So we said, with a beautiful confluence with the 2,162 and the resistant line of that pattern, a breakout will be a good opportunity for us to buy. So with a buy stop order above that structure, I think we had a couple of buy positions in that regard. We were able to capitalize on this uptrend all the way into the all-time high, had a 2,000 what was that again, 2,225 level, giving us over 1,300 pips on that position, as we had two buy position triggered on that one. Now, for those of you who saw my analysis yesterday, my commentary yesterday morning as regards to the current setup, I did tell us that if you watched my commentary in the morning and of course my price action tutorial, I did emphasize that we are within a consolidation phase yesterday, where price action was confined within the $2,210 level and the $2,201.50 area, giving us a choppy market condition. And you know how we do it whenever we have a range bound structure like this. We exercise patience and wait for the market to give us a signal in the form of either the breakout or breakdown of that range. And I later on further gave us an update about, I think about 20 minutes into the New York session yesterday, where I confirmed a new structure here, which was looking like an ascending triangle. Look at this. We had this trend line right here. So I was telling you all that a breakout retest of the 2,210 will welcome buying opportunities, as you will see here, and that if the trend line is broken to the downside, a breakdown of the support line of that range at the $2,201.50 level will be welcoming selling opportunity. And look at how beautifully we had this engulfing bearish candle strike through that support line of that range, and since then price action had continued to find lower lows and lower highs. So as at this point in time, we should be having a minimum of about 300 pips running in profit at this point. In fact, 325 pips running in profit at this point in time. And we also had this second position triggered here, had a $2,167 area. I did updated us this morning about the structure, and if you are taking advantage of that one too, we have two sell positions, though the second one is not running in profit yet, but the first one is running in immense profit. So it is high time we moved all our stop losses, secure this current sell position while we look out for new opportunities today. And if you ask me, I am of the opinion that around the $2,175 and $2,180 area seems most appropriate to move all stop losses to, while we ensure that we have enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action? Well, at this point, the dollar is still looking very strong due to the US Treasury bond yield, and this is following the positive economic outlook. In the US, the US economy is very resilient at this point. We saw the data that churned out this week on this one, and these factors here will be exerting pressure on safe haven assets such as gold. However, any significant decline in gold prices are expected to be limited due to the Federal Reserve indication of less restrictive policy stance and plans to cut interest rate by 75 basis points this year. Now, this could limit the downside, and that is one of the reasons why I have said we move all our stop losses and secure this position right now, because we could be seeing or getting ready for an uptrend continuation. Now, if you look at the higher time frame which I showed you earlier, let me go back to the 4 hours time frame here and let's look at the structure. Remember, I was sharing with you that we had this old structure mapped out at the beginning of the week, which was more of a consolidation, an uptrend continuation pattern, where we saw the breakout of the resistant line of that pattern. And from a technical and theoretical perspective, whenever price action breaks out a key structure like this, we expect at some point in time price may come back to retest the structure. It could be the $2,162 level or the resistant line of that ascending trend line to incite an uptrend continuation. So what we are going to be looking out for around this area is a form of reversal pattern, and then by the breakout retest of that reversal pattern, breakout retest of the neckline of that reversal pattern to continue the uptrend move. So things are still looking very bullish on the XAUUSD chart. So we want to exercise patience right now, as you will see that we are at a crucial juncture in this market where price action has just tested that $2,162 level, which was broken a couple of days ago. Now, if we extend this $2,162 level and then scale back down into the 1 hour time frame, you will see that we need to see how price will react to this area. So if you look at what has been going on here in the last 2 to 3 hours now, you will see sharp rejection of the structure, and in fact we have candles closed in the form of a hammer candle, which technically reveals that buyers are present around this area. So we have a couple of hammer candles here, and look at what happened here as well. During the New York session yesterday, we saw another hammer candle right here. So I want to consider this area as a temporary demand zone. So this whole area right here between the $2,167 area and the $2,157.50 area as a temporary demand zone. So I will not encourage us all to add any more sell positions around this area. Let's exercise patience and wait to see how the market will react to the zone today, and especially as we look forward to the Fed chairman speech. So if we can see any form of reversal pattern here, it could come in form of a double bottom structure, inverse head and shoulder pattern, or a falling wedge. All we just need to do is mark out the neckline of that reversal pattern, and then the breakout will validate it, then give us the privilege of continuing the uptrend move. So I will definitely be giving you updates on both my TradingView and Telegram platform as I continue to monitor price action around this area. And I do hope that I will be able to do my the XAUUSD live window during the New York session today. If that will come up, then we can monitor this together during the New York session. So I still think that we could see a reversal pattern around this area. So let's exercise patience and see how the market reacts to the structure. But if a breakdown of our key level at the 2155 level happens, I'm of the opinion that price may continue to the downside. So a breakdown retest for confirmation's sake, we will be adding another sell positions to our existing trade here. So let's see how the market will play out. We are at a crucial juncture right now, and trust me, I will definitely give you updates on both my TradingView and Telegram platform as we continue to monitor price action. So this is my simple view on the XAUUSD for today. If you have any questions whatsoever, or you need some clarification as regards to what I just discussed, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So if you have found this content helpful so far, please do not forget to click on that like button. Your likes are very valuable to me, and in fact it also helps the algorithm push the video to a wider audience of traders who may find this content beneficial to them too. Thank you very much as you do so. For those of you who had clicked on the like button, I really appreciate you guys. You guys are just too wonderful, and thank you very, very much. So let's see if we have any questions before we go ahead to round off on today's Forex Morning Mastery. See you soon, guys. So I just updated the structure now. I saw an ascending trend line here, which lines up with what I just said here. As you will see, price action is back to testing that ascending trend line around this area. So let's see how the market will play out. It's a very crucial juncture we have here, and trust me, I will be giving you updates as at when due. So I would encourage us all to mark out that trend line too as well. I see your comment at the new Papalola. Okay, don't worry. We will talk about this. I just hope that we could try to talk this weekend and see how that could go about. You can holler at me on WhatsApp. I would I think I have a good habit now on WhatsApp. All right. Okay, so in the absence of no further questions, I want to assume that we are all on the same page. Okay, I can see your comment here. John Alabi says, what caused the massive drop in XAUUSD price? Profit taking or what? Okay, yes, I guess you are just joining us. I guess we talked about this earlier. We talked about this, one of which was profit taking activity, which I discussed during my price action tutorial for yesterday, which I indeed shared the link to it on my Telegram platform. And during that session, I emphasized the importance of the structure right here at the $2,210 area. Now, it's important for us to also note that there are some psychological peculiarity with price action finding a new high. Remember, this is an all-time high. This is the first time ever price action has gotten into the zone on the gold prices. And whenever, it's a normal thing for the human psychology, whenever we get to a new territory, we usually, because of the fact that we are not used to it, fear tends to come in. And where fear tends to come in, you'll see majority in the market start taking profit from the chart with a fear that price may crash from that particular area. So yes, one of the reasons here is profit taking activity. Then secondly, the U.S. economy has been resilient so far. So the sudden rise to the upside here was the immediate reaction of market participants to the Fed concluding that there will be 3 interest rate cuts this year. You know, based on the CPI data, market participants were already pricing in that we will going to only have 2 interest rate cuts for this year. But suddenly, surprisingly, we saw the Fed maintain 3 interest rate cuts, which was not something good for the US dollar. So the immediate reaction was so massive and skyrocketed the price to all-time high. Now, market participants are beginning to digest the implication of that that update, and you know, during that hot period, everyone will react massively. So I think that is the reason why that is. And now that market participants are gradually digesting the information and using it to guide their trading decisions going forward, I think that thing has tempered the momentum a little bit, bringing price to the downside now. So as everyone is looking forward to the Fed chairman's speech later today, you can see price is at a crucial juncture. And in about how many hours from now is the Fed chairman's speech? I think about 3 hours, I think 4 or 5 hours from now, we will be listening to the Fed chairman. So whatever he says here is going to determine how the market will react to the zone. So we've already identified a beautiful zone here that we will be using to monitor price action. And in fact, I have said here that if we see any form of reversal pattern around this area, we are going to be looking out for the breakout of the neckline to continue the uptrend move. So I hope I answered your question there, John Alabi. Let me know if I didn't, and I will try to make it much more simpler if I didn't. So please let me know in the comment section. So in the absence of no further questions, I'm of the opinion that we are all on the same page, and it's on this note we have come to the end of the Forex Morning Mastery for today. In fact, it has been a tremendously profitable week for us all, and I'm so excited about this. And well done to everyone who had stayed faithful to our analytical approach, and of course taking advantage of these trading opportunities. So far this week we monitor 3 financial assets, which includes the USOILSPOT, the GBPUSD, and finally my favorite asset amongst all, which is the XAUUSD, popularly known as the gold spot. And today we were able to identify simple trading setups that we are going to be using to guide our trading decisions for today. So I encourage us all to I hope you all have marked out these levels accordingly on your chart. If you have done so, well done, kudos to you guys. So all we just need right now is exercise patience and allow the structures to mature. So and always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So please, with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place to protect our portfolio. For those of you who are joining us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to enhance your own trading decisions. So I look forward to seeing more of you same time on Monday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to prepare ourselves for the new week. And for those of you who are yet to subscribe to the channel, I think it's high time you did, as I will be sharing up my plans for the new week during the course of the weekend, so you don't want to miss out on those videos, as this will be a precursor for our live session on Monday. So if you are yet to subscribe, click on that subscribe button and click on the notification bell so you can get notified of every content I drop on this platform. So it's on this note I want to wish us all the best of luck. I see your comments, Sahad Chakao. I hope I pronounced that correctly. Please forgive me if I didn't. John Alabi, you are welcome. You guys are wonderful, and thank you for the positive energy today. So it's on this note I want to wish us all the best of luck today, and trust me, I will be with you in the comment section as we continue to monitor price action on all my public platform. So I wish you the best of luck today. I wish you a happy weekend. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.